So, what is a business really worth to the person who owns it? I mean, it seems like a simple question, right? But the answer is the key to understanding its entire financial health. In this explainer, we're going to break down exactly that capital and owner's equity to find out what your business is truly worth. Let's get right into it.
Just think about that for a second. You've got a company, you have equipment, you've got cash coming in, but how much of all that stuff is actually truly your stake? It can get a little confusing, but I promise, if you stick with me, you'll have a crystal clear answer by the end of this.
Okay, so to get to that answer, we first need to get a handle on the three fundamental building blocks of your business's finances. I like to think of it as its financial DNA. Once you understand these three things, everything else just kind of clicks into place.
First up, we've got assets. Now, this is all the good stuff. It's basically any resource your business owns that has value. We're talking about the cash in the bank, the computers on the desks, the delivery truck you use, maybe even the building you work out of. It's all the things that help your business operate and make money. The easiest way to think about a business's finances is to just divide everything into two simple camps. What you own, those are your assets, and what you owe. And that second part, what you owe, that brings us to our next key term. So that second camp is called liabilities. These are all of your company's financial obligations. It's the money you owe to other people. This could be a big business loan you took out from the bank, or it could be as simple as the money you owe a supplier for the inventory that just showed up. It's the owing part of the whole picture. And all of that brings us to the grand prize, owner's equity. Sometimes people just call it capital. This right here is the answer to our original question. It's what's left for you, the owner, after you subtract everything you owe from everything you own. It is your true, undisputed financial stake in the company.
All right, so we have these three core pieces of the puzzle: assets, liabilities, and owner's equity. So, how do they all fit together? Well, it all comes down to one surprisingly simple and really powerful little formula. And when I say simple, I mean it. We're not talking about some kind of complicated calculus here. Nope, just some basic math that reveals one of the most important numbers in your entire business. And here it is. Assets minus liabilities equals owner's equity. That's it. This is the whole shebang, the fundamental accounting equation. What you own minus what you owe equals what is really yours. This little equation is the absolute key to understanding the true net worth of your business. Okay, theory is great and all, but let's make this real. Let's actually put this formula to work with a simple, relatable business. Let's say a food truck. This will show you exactly how it works in practice. We're just going to follow three easy steps. First, we'll add up everything the food truck business owns, all its assets. Second, we'll tally up everything it owes, all its liabilities. And third, we'll just do the simple math. Ready? Let's do it. Okay, let's look at the asset side first. Our food truck owner has the truck and all its equipment, and that's valued at $40,000. Plus, they've got $5,000 cash in the bank. So that gives them total assets of $45,000. Pretty good. Now for the liabilities. They have an outstanding loan on that truck for $25,000. So that's their total liability. And now for the moment of truth, the math. We take the $45,000 in assets and we subtract the $25,000 in liabilities. And the result? The owner's equity, the actual amount of the business the owner can claim, is $20,000. That is the real value of their stake. See? Simple. So we can calculate this number. Great. But why is it so important? I mean, why does owner's equity matter so much? Well, it turns out this one single number is absolutely crucial for pretty much every major decision a business makes. For you, the owner, it's kind of like the ultimate scorecard of your financial stake. And it's a living number. It grows when your business makes money and it shrinks if you take cash out. So it's constantly telling you a story. But you're not the only one who cares about it. If you ever go to a bank for a loan, you better believe they're going to look at your equity to see how risky you are. Potential investors, they use it to figure out the company's net worth. And for you, day to day, it helps you decide if you can afford to grow or to hire someone new. It's basically a vital sign for your business's health. So look, if you take just one thing away from this, let it be this. Owner's equity is way more than just some accounting term. It really is the truest measure of what a business is worth to the people who put their blood, sweat, and tears into building it. And that kind of leaves us with one last thought. This powerful little formula, assets minus liabilities, it doesn't just work for businesses. It works for you too. So what would happen if you sat down and listed everything you own
and then subtracted everything you owe. What's your story?